Our friends out there who have Harleys, listen up. Over 82,000 have been recalled.
Harley-Davidson now recalling more than 65,000 motorcycles. The recall affects model years 2018 to 2023.
The motorcycle industry is in deep trouble. And no, this isn't just a temporary dip or your average market correction. What started as a slow sales season has now snowballed into a full-blown crash. In 2025, the wheels have come off the two-wheeled economy, and industry veterans are calling it the worst downturn in over 3 decades. From inflated prices and declining buyer interest to repossessions and factory shutdowns, the situation is worse than anyone predicted. Walk into any dealership today, and the silence is deafening. Floor plans are packed with unsold models. Prices are tanking. Brands that once ruled the road are slashing operations, and once thriving dealers are shuttering their doors at a terrifying rate. But what's really behind this crash? And how deep does the damage go? In this video, we're breaking it all down, from the bursting inventory bubble to the generational shift in rider culture that no one saw coming. Buckle up, because the 2025 motorcycle crash isn't just bad, it might change the industry forever. One of the most glaring red flags in the 2025 motorcycle market meltdown is the overwhelming volume of unsold inventory sitting on dealership lots across the country. Showrooms that were once buzzing with weekend test rides and steady foot traffic are now eerily silent, with rows of shiny new motorcycles collecting dust. Many of these bikes have been parked in the same spot for months, some for nearly a year, as dealers struggle to move stock. This oversupply isn't random. In late 2022 and throughout 2023, major manufacturers dramatically ramped up production, betting on a continued post-pandemic boom in recreational vehicle purchases. They anticipated a surge in demand as consumers looked for new ways to experience freedom and adventure after lockdowns. But that boom never arrived. Instead, consumer spending contracted, inflation surged, and priorities shifted. Now, dealerships are overwhelmed with excess inventory, and the industry's biggest names are paying the price. Harley-Davidson, Indian, Yamaha, and even premium brands like BMW Motorrad have all admitted to significant backlogs. Despite aggressive discounting, 0% financing deals, and dealer cash bonuses, sales haven't bounced back. In many cases, customers are coming in, checking prices, and walking right back out. The result is a perfect storm of overproduction and underconsumption. It's a textbook supply and demand imbalance, with the added complication of depreciating stock. Dealers are forced to slash prices, eating into their margins, while manufacturers are slowing down or halting production altogether just to stop the bleeding. The longer these bikes remain unsold, the more they lose value, and the more toxic the situation becomes for both manufacturers and retailers alike. In parallel with the inventory crisis is the crippling rise in motorcycle prices, a trend that has alienated a massive portion of the buying public. From 2020 to 2025, the average price of a new motorcycle in the US has surged by over 40%. Where you could once score a solid entry-level model for $6,000, that same category now routinely starts closer to $10,000. And for enthusiasts eyeing premium cruisers or high-performance bikes, sticker shock is the norm, with many models soaring past $30,000 before taxes, fees, or add-ons. This dramatic inflation has been driven by multiple factors: global supply chain bottlenecks, rising material costs, increased labor wages, and a sharp spike in shipping and logistics. But there's another layer. Manufacturers assumed they could pass these costs on to consumers and still maintain demand. that gamble misfired. With average monthly payments now hovering between $600 and $750 for a mid-range bike and interest rates ranging from 7% to 10%, the average buyer is simply priced out. Add skyrocketing insurance premiums, and many would-be customers are finding motorcycles less of a thrill and more of a financial burden. Affordability is dead, and with it, the mass appeal that once fueled the market. The motorcycle market crash isn't just hitting new bike sales, it's wreaking havoc on the used market too. As interest rates climb and inflation continues to strain consumer budgets, loan defaults are spiking at an alarming rate. According to recent lender data, motorcycle loan delinquencies have reached their highest level since the 2008 financial crisis. That's not just a warning sign, it's a five-alarm fire for the industry. As more buyers fall behind on their payments, repossessions are accelerating. Financial institutions, eager to recover any value, are seizing motorcycles and dumping them at wholesale auctions. These repossessed bikes are flooding the secondary market, selling for fractions of their original prices, often to resellers or used bike dealers desperate to offload them for a quick turnaround. This massive influx of used inventory is causing a ripple effect that's devastating resale values. For example, just 2 years ago, a gently used Harley-Davidson Road Glide with low miles could easily command $14,000 to $15,000. Today, dealers are struggling to move the same bike at $8,500 or $9,000. And even at those prices, buyers are hesitant. The problem is compounded by the fact that many potential buyers are holding off, expecting prices to drop even further. As a result, used bikes are sitting idle for months on end, collecting dust and losing value. Private sellers are in even worse shape. Individuals trying to offload their bikes are finding that the bottom has completely fallen out of the market. Offers are insultingly low, if they come at all, and many sellers are being forced to take huge losses or hold on to depreciating machines with little hope of recovery. What's worse, this collapse in the used market is now directly cannibalizing new motorcycle sales. It's simple math for consumers. Why spend $18,000 on a new touring model when a nearly new version is available for less than half the cost? With so many repossessed bikes flooding the system and such steep price differences between new and used, buyers are skipping the showroom altogether. That's a vicious cycle, one that further drives down new sales, increases dealer inventory, and drags prices lower across the board. Beneath all the financial turmoil lies an even deeper structural issue. The motorcycle industry is facing a demographic cliff. For decades, baby boomers were the lifeblood of motorcycle sales, especially for high-margin touring bikes, cruisers, and premium brands like Harley-Davidson and BMW Motorrad. These older riders were passionate, loyal, and willing to spend big. But now, time is catching up. Many boomers are retiring from riding entirely. Age, health issues, and lifestyle changes are leading longtime bikers to park their motorcycles for good. And when they exit the market, they're not being replaced. Their absence leaves a massive gap, one the industry has failed to prepare for. Younger generations aren't stepping up. Millennials and Gen Z are far less interested in motorcycle ownership. Economic pressures like student debt, sky-high rent, and general cost of living issues are part of the equation. But lifestyle preferences are a bigger problem. These younger buyers are more likely to invest in smartphones, gaming setups, and travel experiences. Even among those interested in mobility, many are opting for electric scooters, e-bikes, or public transportation over motorcycles. Additionally, urbanization plays a role. Younger Americans increasingly live in cities where owning and parking a motorcycle is impractical. Combine that with growing safety concerns and high insurance premiums, and it's no surprise that motorcycles have become a tough sell. The result? A shrinking customer base and a growing mountain of unsold, overpriced machines. Without a new generation of riders to replace the old, the long-term future of the motorcycle industry is in serious jeopardy. As the motorcycle industry grapples with a collapsing market, manufacturers are being forced into drastic action to limit their exposure. Harley-Davidson, a bellwether for the American motorcycle market, has already halted operations on 2 of its key production lines. The company cited unforeseen demand volatility, but the reality is clear. Their showrooms are full, their bikes aren't moving, and continued production would only deepen the inventory crisis. Indian Motorcycle, another heavyweight in the U.S. market, has reacted by sharply reducing the number of bikes allocated to dealers. They're attempting to prevent further saturation, but this also leaves dealers with fewer options to entice buyers, creating a lose-lose situation. Honda, which traditionally maintains a strong presence in both the sport and touring segments, has drastically cut back U.S. shipments, redirecting resources to more stable global markets. Ducati, facing similar pressures, has frozen several anticipated new model releases for 2025. The electric sector isn't escaping unscathed either. Zero Motorcycles, once considered a trailblazer in the EV motorcycle space, has laid off nearly 30% of its workforce. Investor confidence is fading, consumer adoption has stalled, and even the future of electric motorcycles now looks uncertain. These aren't minor operational tweaks or strategic slowdowns, they're survival maneuvers. Manufacturers aren't talking about expanding lines or growing market share anymore. The focus has shifted to keeping losses in check, minimizing production costs, and staying afloat in an environment where demand is evaporating. While manufacturers scale back, the front lines of the industry, the dealerships, are enduring a full-blown crisis. Since January 2025, nearly 120 motorcycle dealerships across the U.S. have shut their doors, many of them permanently. These closures are the result of financial pressure that's been building for years, but has now become unbearable. Most dealerships rely on what's called floor plan financing, essentially taking out loans to purchase inventory from manufacturers. When bikes sell quickly, the model works. But in today's stagnant market, unsold inventory means mounting interest payments, often on machines that depreciate by the week. With interest rates climbing and sales volume plummeting, these loans are turning toxic. Operational costs only make things worse. Rising rents, ballooning utility bills, and labor shortages have all combined to crush profit margins. In desperation, some dealers are shifting towards selling used motorcycles, ATVs, or even e-bikes. Others are getting out of the power sports business altogether. The dealership ecosystem is crumbling, and with it, the industry's last major touchpoint with customers. As the motorcycle market spirals downward, dealerships and manufacturers alike are being forced to rethink their strategies. With new unit sales in freefall, a growing number of dealers are shifting their business models to focus on more sustainable revenue streams, namely parts, service, and accessories. This pivot is no longer optional, it's survival. Walk into many motorcycle dealerships today and you'll notice a change. Fewer new bikes on the floor and more emphasis on service bays, racks of riding gear, and walls lined with accessories. Some dealers are even converting portions of their showrooms into gear boutiques or workshop lounges. Helmets, jackets, aftermarket exhaust systems, tires, batteries, anything that's still moving is now the center of attention, and for good reason. Unlike new bike sales, parts and service are relatively stable. riders still need oil changes, tire replacements, and brake work, even when they aren't buying new machines. Gear wears out. Accessories get upgraded. These categories provide consistent, if modest, revenue without the heavy financing risks of inventory-laden showrooms. It's not as glamorous as selling brand-new models with big margins, but it's paying the bills in a way new sales no longer can. This transformation is happening across the board, even in dealerships that previously thrived on high-volume unit sales. Some are leaning into service so heavily they're becoming more like full-time repair centers. Others are organizing local rides, offering rider workshops, and doubling down on community engagement to drive gear and service traffic. It's a significant cultural shift and a clear sign that traditional motorcycle retail is being forced to evolve fast. But while this change may help dealers tread water, it's not the revolution the industry once hoped for. That role was supposed to be played by electric motorcycles, sleek, high-tech machines that could reinvigorate the market and attract younger, eco-conscious buyers. Unfortunately, 2025 has proven that dream to be far from reality. Electric motorcycles were hyped as the future, but several major hurdles remain unaddressed. First, the price point is just too high for most riders. An average electric motorcycle from brands like Livewire, Zero, or Energica still costs upwards of $20,000. That's a steep ask when gas-powered cruisers can be had for less than half that, especially in a market already paralyzed by affordability concerns. Second, there's the issue of range and infrastructure. While EV bikes are improving in range, most still fall short of what long-distance riders expect. A 100 to 150-mile range just doesn't cut it for touring or adventure segments. Combine that with a still limited charging network, especially outside of urban centers, and you've got a formula that doesn't appeal to traditional motorcycle consumers or even curious new ones. Lastly, the riding experience itself is different. Some enthusiasts love the silent torque and instant acceleration of EVs, but many traditional riders miss the visceral sound, feel, and mechanical connection of internal combustion engines. The culture around motorcycles, the rumble of a V-twin, the smell of fuel, the legacy brands, doesn't translate easily to electric platforms. So while EV manufacturers continue to innovate, they're doing so for a niche market, not the mass consumer base the industry desperately needs. Even dealerships that stock electric bikes find that test rides don't often convert into purchases. The interest is there, but the commitment isn't, largely because the economics just don't make sense for the average rider. The dual shift toward service, accessories, and EV experimentation shows that the industry is actively searching for lifeboats. But neither path offers a true solution to the underlying crisis. Until prices drop, infrastructure improves, and younger riders start engaging in larger numbers, these pivots are simply short-term stopgaps. The future remains uncertain, and the clock is ticking. The 2025 motorcycle crash may have sent shockwaves through the industry, but for buyers, it's presenting a once-in-a-generation opportunity. Prices are falling fast and hard. Dealerships are stuck with piles of unsold inventory from the 2023 and 2024 model years, and they're under increasing pressure to clear it out before the 2026 models arrive. That urgency is translating into massive discounts. By Q3 and Q of 2025, shoppers can expect markdowns of 20% to 40% off MSRP on a wide range of bikes, from premium touring machines to nimble mid-tier adventure bikes. It's not just new bikes either. The used market is an absolute goldmine for buyers right now. With repossessions flooding auctions and private sellers slashing prices just to move product, deals are everywhere. A motorcycle that might have cost $12,000 2 years ago can now be had for $6,000 or less, and that includes low-mileage models from top-tier brands. Whether you're a seasoned rider or a first-time buyer, the next few months offer some of the best pricing conditions in recent history. But while buyers have the upper hand, the story is much darker for sellers. Trying to offload a used bike right now is like swimming upstream in a flood. Private listings are being undercut by dealer fire sales, and repo auction pricing is dragging down the value of even well-maintained high-spec motorcycles. Anyone hoping to get a decent return on a bike they purchased in the last few years is in for a rude awakening. The resale value floor has collapsed, and sellers are being forced to accept significantly lower offers, if they can find buyers at all. For private owners, the window to sell for a reasonable price is closing fast. With each passing month, more distressed inventory enters the market, driving values down further. If selling is a necessity, the time to act is now. But be prepared for aggressive negotiations and disappointing offers. Behind all these transactions lies a deeper shift. The crash of 2025 isn't just a pricing correction, it's a full-blown cultural and economic reset for the motorcycle industry. The old model, producing in bulk, stacking showrooms, and pushing sales through flashy marketing, is breaking down. In its place, manufacturers and dealers are being forced to adapt to a more cautious, cost-conscious, and digital-savvy customer base. Moving forward, expect to see leaner inventories and fewer models as brands cut back on overproduction. The days of bloated product catalogs are over. Instead, manufacturers will focus on releasing fewer, more targeted models each year. Dealerships, already reeling from closures, will shift further toward online sales, curbside pickups, and mobile service units. The entire customer journey, from discovery to delivery, is moving online. Even major brands might rethink their global strategy. Some manufacturers may scale back or entirely withdraw from the US market, redirecting resources to countries where ridership remains strong and price sensitivity is lower. Meanwhile, newer brands with agile business models and direct-to-consumer strategies could rise to fill the gaps. The eventual recovery is inevitable, but it won't resemble the market we knew 5 years ago. The future of motorcycling is shaping up to be smaller, smarter, and far more selective. Bikes will need to be priced right, designed with purpose, and marketed with precision. The industry can survive, but only if it sheds the excess, embraces flexibility, and connects with the next generation of riders in a more meaningful, value-driven way. The writing's on the wall. The 2025 motorcycle market crash isn't just bad, it's industry-defining. From unsold inventory to demographic shifts, from repo auctions to dealership closures, the entire ecosystem is in flux. Whether you're a rider, a seller, or someone just watching from the sidelines, what's happening now is historic. But every crash comes with opportunity. If you're looking to buy, the deals ahead could be the best in a generation. Just be smart, patient, and informed. We'll be watching this story closely, bringing you the latest updates and breakdowns. If you found this video helpful or eye-opening, be sure to like, comment, and subscribe to stay informed. And hey, what are you seeing in your area? Are local dealerships feeling the heat? Are prices crashing where you live? Drop your thoughts below. We read every comment. Until next time, ride safe. Or maybe just wait it out.